to the Hurley Investments Market View commentary for Monday, August 3rd. Just to give you a heads up, next week I will be gone on my annual Flaming Gorge trip. I usually will do one of my commentaries from a gas station, but Brian has been so kind to take care of next week's commentary, and he's also going to take care of the week after. So you're going to get a double dose of Brian, and then you'll finish up with me the last two Mondays of August. And I am still actually searching my bag for a cord that I am trying to find that I would be using to get a couple things charged, and I'm not finding it. So I'm going to leave that to the side. Let's get working on my commentary for tonight. As we've seen in the last few weeks, a lot of tech has gone down and a lot of tech has come right back up. So I'm going to ask the group tonight, is the AI trade dead? Or can someone tell me what firms will be profitable from the huge collapse that's coming? Anyone feel that the AI trade is dead? That the AI trade is not going to go anywhere? And again, there necessarily are no right answers because we don't know the future. So Abraham says, no, the trade is not dead. I wouldn't think so either. But we're not really getting the results that we would expect. I've made this comment before, and I'm going to go ahead. I'm going excuse me. I'm going to make it again. My belief system is that there are going to be many winners in the AI trade. And I am saying that for no other reason that when we talked about the Netflix, the streaming video trade, there is only going to be one or two winners in that arena. That was it. We're going to have some winners, we're going to have some losers, and it was not going to be a zero-sum game. Was it going to be possible to see Disney claim the opportunity or the profitability to take money away from Netflix? Was it all Netflix? Was Netflix going to take 99% of the streaming video because they were first into it and they had all their stuff in place? I find it interesting because my belief is that obviously there can be multiple winners. I never thought I would have 17 streaming services, but I had Netflix, and then I got Prime Video for free by joining Prime. And then you buy an Apple phone and you get Apple Video for free because you bought an Apple phone. And before you know it, you get hooked on their services. Oh, I gotta watch Yellowstone because I can get it on this one. Oh, I love this new Angel TV. Hey, you can watch The Chosen on this service. Before you knew it, and I'll be 100% honest with you, it was one of the best babysitters I ever had. It kept my kids at home. It kept You know, date night was, hey, let's go over to the Hurley's house. At the Hurley's house, we can watch this show. It was almost like kids stopped going out to the movie theaters because the Hurleys had all of these subscriptions. And I loved it. I love having my kids around the house. I was in seventh heaven. It should be, well, everyone's making money at it. As we went through last week, for crying out loud, I found it very interesting that Google create $99 billion of revenue investing in AI. That's a bad company. It lost a third of its value. I'm going to go out. I'm going to pull some charts up because I just thought it was interesting. Apple this year has done phenomenal, better than last year. To start right around 277, to be at 334 a couple weeks ago, to have this drop and finally get back above the 50-day simple moving average, which is 303.42. Last trading at 30, excuse me. It last traded at 303.42, trying to get above 309.52. What a great opportunity it is for Apple to have some success. Let's find a couple other ones. In fact, let's go through our Magnificent Seven, right? Which are not all of them. Google. Look at the drop from Google. Thank goodness we had protection in place. Drop down to 314 because heaven forbid they're able to make $99 billion. Their real cash flow, $9.20 some odd cents instead of $7.75. Earnings, they were at 341. They finished at 373.51. Little diluted. A little ridiculous, in all honesty, if you ask me. What an amazing run from Google. We made money going down. We're going to be making money going up. All right, let's pull up the whole. Let's take Meta. Again, I will agree. Meta, a loser for the year. 590 traded at 670. What, 672 at the start of the year? All they've done is make money on their AI. Thank goodness we had protection on Meta. Thank goodness we're in some spreads. Hurley Investments has made the comment that we will most likely be able to see a rebound into technology into the end of the year. It seems like it's happening already. We're going at yearly lows, which probably suggests we're going to bounce higher into the end of the year to those all-time highs. One that hasn't gone anywhere, but we've stayed in it. NVIDIA. Breaking above the 50-day simple moving average. A good bounce off of the 200-day. Earnings coming up towards the end of this month. What a good opportunity we seem to see or have possibly in NVIDIA. I'd really love to see NVIDIA get back up, get to the 240s. That's the price that I think it should be at. Early in the year, in the middle of May, it traded at 236. Boy, thank goodness we're holding on. We haven't sold off our Micron shares. As long as Micron stays above 800, we're going to make a killing on everything. As long as Micron stays above 500, which the 200-day on Micron is at 521. As long as Micron stays above that 200-day, 70% of our long-term bull call spreads will net a maximum profit, 150 to 300% returns. Does it make sense for being the most, I don't say the most profitable, but for 3 to 400% returns quarter after quarter to lose 41.99% from that high of 1254 down to 737? It doesn't make a lick of sense. We lost roughly $420, 42% basically on the stock because of future fears that are non-existent. Our biggest concern, hey, what if these big AI giants stop paying or stop growing their AI business? Micron's 3 years in the running. They're the newest Boeing. They have 3 years of chips backlogged. NVIDIA, 2 to 2.25 to 2.5 years of GPUs and chips backlogged. Other companies are trying to create their own chips like Intel, like Apple. It's just not going to work. These are great companies that are really misunderstood. And they're misunderstood because people aren't working the numbers. That's why we go through our numbers with you guys at the beginning of the year. It really is a clear no-brainer that this is where we're going to want to be. Now, no one piped in there Netflix. So, Netflix is kind of the redhead stepchild of the Magnificent Seven. It really has good numbers. It would not surprise me by the end of the year to see Netflix up at 110. It's there. It's going to be there. Their shows are great. People are going to they're going to find out Netflix is a much cheaper place to put their money than going and buying a $1,200 Micron or a $400 Apple or a $500 Google. This is going to be a technology opportunity to get a bounce back from $65, currently trading at 73, up to 110, $37 upside, 50% return on the stock. their numbers are good. This will be that winner for you, hopefully here at the end of the year. So, looking at the stocks, the charts, what is it telling us? Misunderstood. And the professionals are not working the numbers. Let's pick on the professionals a little bit. Situational awareness. It's an AI-based hedge fund. I think it's hilarious, but I only think it's hilarious because I'm a bit of a jerk. A magnificent 24-year-old knows numbers and mathematics beyond belief. He is a genius in math. An absolute genius. You can't find a smarter mathematician that even bragged about how easy the stock market is and how well he's going to do. The bad part is this loser created some returns in the stock market that won't be backed out. These returns are not going to be backed out of the stock market. But in a couple days, he went and he destroyed $45 billion in assets, went down to $10 billion. The interesting part about all of this, if you can call, this tragedy interesting, the interesting part is after he paid his fees and closing fees for some of these funds, it looks like he'll have less than $5 billion left in the account. So this mathematical genius that took, started with $3 billion, took about 13 to 19 $1 million of new monies in, but basically got a 200% return on his fund, just collapsed and burned the whole thing. His fund sat atop of 45 billion assets. By Thursday, however, after being forced to offload all his leveraged stock bets, like CoreWeave, SK Hynix, the fund plunged to around 10 billion. You pay your fees, your borrowing costs. You deal with all of that. Bingo. His fund's worth really somewhere in the 5 to 7. That's not an accurate. No one really knows exactly. I'm going to tell you it's probably more like that 5 number. But will they back out these gains that he had that was leveraged and fictitious? Nope. Just kind of sucks to be us. Rather ridiculous. So, guys, some of these returns that seem too good to be true are too good to be true. Really, if you don't have a process, you're not going to make the returns that you think you should make in the stock market. This is a very simple procedure. Protect stock ownership as stocks go down. Let stocks run when they run. What we do is not rocket science, but I would dare say you could run our returns against anyone's in the stock market and be very pleasantly surprised with the results that you get. I included an email from Goldman Sachs, just a weekly update. I'm putting this in here because it's a fear-based email trying to push the need for people now that funds are not funds, excuse me, bonds and bond funds are now producing between 4.5% and 5.5% on AAA rated treasuries, high value corporate bonds. Here is the email to talk someone like me into thinking it's a good thing to put you guys into bonds for a return. When we compare the current AI boom to the 1990s dot-com bubble, we still see few signs of the macro imbalances that signal the end of the dot-com bubble. Oh my gosh, let's start it off with fear. Renewed concerns about return of AI investment also weighed on U.S. equities. Oil prices surged amid escalating tensions in the Middle East. Is a surge of U.S. IPOs a warning for stock investors? New companies, it's going to be a record year in IPOs. That's a warning sign. Apparently, growth in the U.S. is bad. Are hedge funds still bullish on IA stocks? No, it's an overly crowded. Greatest accumulation selling of tech stocks in history happened last month. There's a whole lot that I'm letting you guys gonna read in this. But it's interesting because a lot of what's coming out by way of news, munis are having a solid 2026. They're seeing a 2.6% return to a 3.74% return. Can someone tell me how much the S&P has returned this year? Someone type in how much the S&P 500 has returned this year. 11.2%. I actually thought it was 11.02%, James. But the S&P has done a double digit as of right now return and has given us that 3 years in a row. This will be the fourth. So someone tell me, is a 2.6 total return to possibly moving into a 3.74% return? Paying someone like me a 5.5% to put you into the fund? Are munis a great place for people to put their money based on the history of our stock market the last 4 years? I'm not saying there's not a place for a tax-free return if they're munis. But our stock market in 7 months this year has given us 4 times, roughly, the return of munis. But it looks like someone needs to make some commissions. how Morgan Stanley is positioning its income portfolio right now. Oh my gosh, no credit risk. Yet we had credit risk at the beginning of the year. We had credit risk with the war on Iran. Morgan Stanley, you can bring yields as high as 5% that are taxable in a market that already has given you double that for the year. Oh, and don't forget, it kind of usually costs you 5% for every $100 you put in. Well, for every $1,000 you put in, 950 goes into the bond. The other 5% is a fee slash commission for 63 and 6 owners to put people into those. But now's a great time. I don't understand where the push is coming from, but this is what we're getting bombarded with right now. For me, I'm going to keep running the course. I'm going to keep running the course. I think it's the smartest thing to do because that's what the numbers show me. The big picture, all of a sudden, the United States and Japan boosted up the value of the yen so they couldn't devalue the value of their currency at the end of the month for currency swaps. It was a brilliant move. The fact that our president and the president of Japan did not let China get out of interest rate payments by devaluing their currency at the end of the month. Well, oh my gosh. The yen's 40-year low increases the risk of another carry trade unwind. There were huge news on how the U.S. and Japan was not letting China was not letting China get away with not paying its fair share, so to speak. And all of a sudden, this comes up on the big picture as another risk. It's an interesting article that, again, all it does is instill fear on something we knew that we were doing for the short term to punish China. Currency swaps and currency movements tell a lot about stock markets. But when we're notified ahead of time and the push for inflation and currency swaps and carryover unwinding trades, it's just ridiculous. Guys, we look really good. I thought I put these in here, but I didn't. Right now, our market's where we want to see it. We do need to understand that we probably will have something to worry about end of September, October. Those are usually just down. Oh, come on. Where is it? Those are usually just down months. Where are you? I don't see it. Swear I took the screenshots. Just do them backwards. 8-3. That's the wrong one. I got to figure out how to get it done. So let's start. Let's start back with the NASDAQ. NASDAQ. Technically, we've got our crossovers. It's bullish for a single day. We are so close to capturing being above the 50-day again. Look for a bounce. A lot's going to be said tomorrow if we can capture that 50-day simple moving average. What is it? S&P 500. We got our bounce off of the 50-day. I said to expect it. It took a week, but we're now bullish on the S&P 500, which gives us a reason to run to new highs throughout the end of summer. I'm not going to tell you into the end of the year. I would expect the end of the year, but it's more likely till the end of summer. And the Dow. Same exact thing for those 31 stocks. Already looking at being at new highs for the year. I like the way our indexes are shaping up. Where will we end August? I'm still going with the 1.5% that I thought we would end July at. We're approaching the second big week of earnings. Next week will be the third big week of earnings, where 60% of all the stocks are running their earnings during that 3-week period of the earnings season. Palantir today. You'll notice we did a little bit of change on Palantir. On our spreads, we took off the short calls and took in a $15 profit on the short side to offset our $32.85, I think, long side. Palantir ran $17 after the market today. If Palantir runs back up to that $166 range, we can get out of our trade, breaking even on the long side, taking a $15 profit on the short side. We're going to make a 50% return on a Palantir bull call. Shares. Those of you that are in shares, we're most likely going to rip off those long puts tomorrow. Let that stock run. That's our goal. We have Pfizer and SpaceX tomorrow. I'm looking forward to seeing where those end up. Disney on Wednesday. Which is real estate income, but we don't protect O like we do a normal stock. Twilio, Roku, TAP, which is Coors on Thursday, Friday, Wednesday, Wendy's and Under Armour. There are a lot of stocks. I only put some of the main ones because I don't follow them all. But this is your second busiest week in the stock market for earnings this quarter. And you'll have one more coming next week. Economic reports. No big movers today per se. But this week we'll look at ADP employment. We'll really get hit on Friday with non-farm and private payroll, hourly earnings. There is some worry about consumer credit because it's so high. We have had a run of some defaults, but nobody is technically worried about consumer credit other than those that want to put fear into you in the stock market. Boeing shares. Q2 results didn't help, yet it was up $17 today, roughly. Let's see if I'm lying to you. But $17 roughly, because 737s are off to the races. $17.35. Those that are in Boeing, we look really good running Boeing into the end of the year. I went through munis, went through income portfolio. SpaceX has now lost the equivalent of a full Tesla in market capitalization. A lot of you talked about what a great opportunity this was. I'm glad you listened to us as you talked to us one-on-one. SpaceX was never a good opportunity from Hurley Investments working their numbers. It's down at it closed at $114 after it was up $6.16. Please don't think that SpaceX has a great earnings coming up. It would not surprise me to see SpaceX trading below $100 a share by the end of this week. They're not profitable. It's just right now a poorly run company that no one can make their numbers work. It just doesn't. I'm glad you listened to us on not investing in that. Here's where Jeffrey Gunlock is investing at the Fed held rate steady. Really neat to see someone else talking about federal funds rates and bonds. There is a reason people on TV are pushing your bonds. They make a crap ton of money to put you into them. Went through the Leopold. That's what I have for you tonight. Guys, I know I probably sound like I was harping on things. I do apologize. Questions. What, if any, questions do you guys have that I can try to answer for you in regards to the market or why we're doing what we're doing at this time? Ooh, two of them came up really quickly. Why are we in Nike? We're in Nike and we're in Lululemon because we can't find a undervalued price stock in technology, in materials, in the financial sector, and the healthcare sector. We're in Nike to catch the early pre-Christmas run, August through September. We're in just a spread. We're going to take money, profit, hopefully, running into earnings for both them and Lululemon to make a little bit of money on a spread. That's why we're in Nike. That's why we're in Lululemon. It's really hard. And last week I think I recorded the commentary because I had an opportunity to go on a date with the missus. But if you go back to last week's, there are very few, if any, value stocks that are fundamentally sound. There's very few growth stocks that are fundamentally sound that would warrant an investment into growth or blue chip type of stocks. As we got our heads together, the comment was, well, we can't just sit on people's money. We got to go find these opportunities for our clientele. The opportunities are a typical cycle for our retail stocks. We jumped into Lululemon, trying to find some opportunities there for you guys. One contract of Lululemon is up about $265 today. Nope. Gain is 139. It's a total gain of $265 on a $1,200 cost basis. So we're just trying to run that. Nike on a single contract is up a whopping $36.36. We're down $30 on it today, but on a $448 cost basis, we're up about 7.5%. So great question. We're just trying to find some opportunities that we're looking for to make money for you guys, while our tech stocks to a certain degree languish over the summer doldrums. Great question. Thank you very much. Jackie, I've got another call. It'll have to be about half hour, 45 minutes after. Any other questions that you have? Great question, Mary. So why did we not take our puts off sooner on Boeing? Boeing moved today because of a news event. It spent 4 days trying to get over the 200 and the 50-day, which are trading within $1 of each other. The 50-day moving average is 219.13. The 200-day moving average is 218.47. We did not take puts off because it was not getting over its simple 50-day and 200-day moving averages. News came out today. We let E-minis go through. We tried to take it off at the East Coast lunch hour. Could we have taken them off any of the other 4 days prior to today that the market traded? We could have. But technically speaking, it was not the right time. If we could have outguessed the market or had insider trading that we knew that Boeing was going to get a release on their 737s, we would have taken the puts off. But in all honesty, it's not our job to try to outguess the market. It's not our job to gamble with your money. All of our indicators show that the stock could not get over for 4 days. Usually that eats up all the buying orders. The news order today moved the stock higher, so we took off the protection as prudently as we could. That also goes with Meta. Meta also had a significant urge today, surge, not an urge, but Meta had a significant run up today. We did take protection off Meta. We did take it off for a profit, and we felt comfortable with that. We did keep Meta short calls on. Kevin, why did you do that? Same reason. It did not get over the 50-day simple moving average today. It's not our job to gamble, to outguess, to pretend we know something that we don't. We use our system to protect stock ownership, to make something up on the way down. Hopefully, if we get a trend to the downside, we can cash it in and we can dollar cost average for you without asking you to put more money in your account. So again, that's what we're doing. We will be welcome. If you guys have any questions on why you're doing things, this is the webinar for you guys to ask those questions. This is where we want you guys to say, hey, how is my money being managed and why? That's our job to help you understand what we're doing and why. But again, if it looks like we've missed something, I'm going to suggest you go back to level 1. Go back to your technical analysis, your fundamental analysis, your sentimental analysis. We still use all 3 of those. We don't ignore any of those. You can say historical analysis for SpaceX. We're doing what prudent investing requires. So I hope that's helpful for all of you. Any other questions that you guys have? And thanks for asking that question. Hey guys, have a good evening. Appreciate you. I'll be 2 weeks out, not taking a vacation per se, but I am. I'll be watching the stock market, but you'll have Brian for the next 2 weeks. He's got some interesting, more option training he wants to do with you that I think is going to be very interesting, that you'll like the next session next Monday night. So please enjoy it. Yes, I am kind of stalling to see if any other questions come in, but it looks like no more are. Guys, I appreciate you being here tonight. Look forward to seeing you in another 2 weeks, and I'll finish up the last 2 weeks of August for our webinars. Have a good evening, guys. I will talk to you later. See you here in a couple weeks. Bye-bye.